So let's talk about evaluating sell or process further decisions. So sell or process further. The idea here, I think of any food, right? We talked about apples. So you can pick an apple from a tree and sell it, or you can process it to apple juice, or you can process it further into cider, like maybe a hard cider, alcoholic cider. And then if you wanted, you could brand it further and bottle it and put it into a nice and put it into your store and sell it, right? So that each decision along that process, we have to decide as a business, does it make sense to sell it as an apple, or should we process it all the way to alcohol? And it's a question, why do some companies just sell apples and why do some sell alcohol? Well, some have advantages over others, and that goes into the make versus buy as well, right? This is the other side of it. Do they want to sell it or process it further? And so as a general rule, we'll process further only if the incremental revenues exceed the incremental costs. So the idea here is if we can make more revenue from our further processing, then we are going to make sure that we do it. More revenue than our incremental costs. So we have 40,000 units of partially finished product queue. So we'll call that apples, partially finished apples. Processing costs for the apples are $30,000. The 40,000 unfinished units can be sold. So we're saying the 40,000 units of partially finished queue, so apples into apple juice. Processing costs today are $30,000 to make the apple juice. The 40,000 unfinished units could be sold today for $50,000. So we can sell each apple for about $1. Or they can be processed further to produce other products. We can make applesauce, we can make hard cider, whatever. So processing the units further will cost an additional $80,000 and will yield total revenues of $150,000. So the idea here is, should we make the decision? Should we just sell the apples for $50,000, or should we spend time to process them all further into other products and able to yield these future revenues? And so, relatively simple process. We decide if we just sell the product as apples, we wouldn't have any new incremental costs, and we can make $50,000 in revenue. But if we're able to process it further, we get, instead of $50,000, we'll get $150,000, and our incremental cost will be $80,000. So the difference here is $70,000, right? So that's where we would decide from a managerial accounting perspective, yeah, we can process this further because maybe that's $70,000 a month, and maybe that, that $20,000 extra a month winds up being $240,000 extra a year. That's pretty substantial. So the $30,000 of previously incurred manufacturing costs are sunk costs, right? They happened beforehand. They're irrelevant. So where you can go wrong here is by saying, well, our processing costs today are $30,000, so we're going to add incremental cost of $30,000 here and $30,000 here. It's not relevant. We already spent that money. We can't do anything about it. So it's a sunk cost. We don't include the sunk costs here. So if I asked you how much additional money would we make from, or revenue we'd make from processing the products further, it'd be the 70,000 minus the 50,000, right? The 20,000. So I'm going to stop.